Welcome to my daily review. Today is Thursday, June 6th, the 80th anniversary of D-Day. So we think we just had a Memorial Day, and we want to thank all the soldiers fought in that war and active, and those who have fought in the past for their bravery. Much respect. Anyway, today is our daily review, and it's before our jobs report tomorrow, which was going to be pretty important. Today, the Nasdaq gave back 15 points or 0.09%, closed at 17,173. It did make a high of 17,235 before pulling back. I mentioned the jobs report because, the ECB, the European Central Bank, lowered interest rates. It was not unexpected. It was expected, but the European stocks got a little boost from that. This is on top of the Canada lowering rates yesterday. So the thought process is if we have a weak jobs number, then maybe Jerome Powell will start to at least talk about lowering rates and at least not raising interest rates. The next move will be lower. And so what we're hoping for is a weak jobs number, and that will prompt Powell to move quicker, because I think the market's worried about Powell not getting the message and taking too long to cut. Like, he took too long to raise rates, and his transitory stance for a long time and allowed inflation to get out of control. So they're definitely watching Powell and what his next move might be. So tomorrow, bad news is good news. We're hoping for a weak report. And if it comes in strong, our growth stocks are going to get hit. So you have to know that going into tomorrow. If you're a longer term, you don't really care. Shorter term, yeah, we need a weaker report, a strong report, and our growth stocks are going to get hammered. The Nasdaq here is just in a power trend. It pulled back, I believe that was last week. Was it Friday? Yeah, Friday. And pulled back to the 21, undercut it, then rallied. I think it was down 2 points that day. Anyway, then Monday, Tuesday, Wednesday, we rally hard. And then today we just kind of take a little profit taking, a little caution ahead of this jobs report. So it closed at 17,173. This is the leading index. I'm not going to go through the other indexes today. Tomorrow morning is a big jobs report. It's really important for the direction of this market. Like I say, a hot number is going to, it's going to put the hurt on our growth stock. So I don't even want to think about it. Today's video will be a little shorter because it was really a nothing burger today. Meta Platforms just dancing with this 500 number. We mentioned that on that pullback to 414 on the outstanding earnings report. It's just done nothing but trade up to 500 from that 414 number. So probably a little resistance. It's above its 50 here, but probably going to see some resistance at that large round number. But like I say, if we get a tame jobs report tomorrow, this thing could be a leader and blast higher for sure. Apple, another stock that I like, pull back slightly today, less than 1%. It's had a nice run, allowing the moving averages to catch up. You can see the base on base pattern for Apple. I like that one as well. NVDA looked like it was going to take off again this morning. They had some news about, Microsoft, OpenAI, and NVIDIA. I didn't want to get into that. It's just kind of silly. But anyway, this thing's going to trade on earnings over time. And they've got the earnings, like I continue to say. We've never seen anything like NVIDIA, a large company like this delivering triple-digit sales and earnings growth. And I'm sure they're going to continue to do well. The stock probably needs to base here after the run from 974 to, what was it, 1255 today. So it made a new high and then reversed. But, it's got so much momentum. We just really don't want to guess which way it's going to go. Just take it one day at a time. If you own the stock, then, it's going to split Monday. If you have 10 shares, you get 100. If you have 100 shares, you get 1,000, and so on and so forth. So the 10-for-1 stock split takes effect next Monday. Anyway, that's all. Well, I mentioned Microsoft. So yeah, they're part of this investigation as well. It was just flat today. Consolidating in a base above the 50, doing nothing wrong. So yeah, today was just a day of caution. I did mention the European, the ECB European Central Bank lowering interest rates by 25 basis points. And some of these European stocks did pretty well today. This is Deutsche Bank, German finance company, up 1.2%. SAP is another German software company. This one popped 2.2% on the lower, and this will happen in the United States as well. If Powell starts to lower interest rates, our growth stocks are going to pop as well. NVS, Novartis, this is a Swiss company. It popped 0.73%, not bad on a pretty weak day today, pretty cautious tape. Novo, this one's breaking out of its base. This has been on our ready list. Just a slow mover, it's just like a little snail, just inching away from its base. It'll find another home, another base somewhere, some point, but definitely a strong stock. That's the largest European company in Denmark. Company, Rio, you think of Rio, oh, that's got to be a Brazilian company. No, it's a UK mining company. It was up, nearly 2% today, and it's been in a kind of a downtrend with commodities, reducing or lowering or, just pulling back a little bit. This is a Sanofi medical ethical drug, French drug stock. It was up nearly 1%. On Holdings, I didn't really look at this one today. It was up 0.5% though. Okay, this is Swiss-based, shoe company. So a lot of these European names traded higher today, in a pretty cautious tape. And like I say, if Powell even hints that their, rate hikes are off the table and they're thinking of lowering rates, our markets are going to rip. So, weak jobs report will go a long way toward prompting Powell to move in that direction. Okay, I'm going to go take you through some negative stuff before I hit some positive stuff. And this is CEG. It's not really negative. It's just, it looks to me like it's forming a base here. It sold off, ran up to what, 236, and then it sold off down to this 50. So you think, okay, pulls back to the 51 time for the first time after it, formed a base. So this is going to be a power play higher and drive through these moving averages. Not so fast. It traded up to its 21 on Wednesday, and today pulled back sharply, and that is not a good sign. Down 3%, but you could say, wow, it just traded back to that old buy point, right? Well, you don't want to continue to keep hammering this 50 because one of these times it's going to drive right through there. So I wouldn't be too aggressive here with that 198 buy point here. I want to see a bounce higher, and you got to take a look at the weekly here, at least above this week's high, 217. So it's got some work to do. It's Constellation. VST, the same thing. These things have been running for a long time. Utility moving like that is pretty rare. And so it made that high of 107.24 on May 28th, sold off. Now it's pulled back to its 50. And, this thing has not based since, November of 2023. So maybe it's time here for these ones to just take a break. Every long distance runner needs a timeout and take a break. And this is VRT, made that high on May 24th of 109, is just sold off ever since. And now today sliced its 50, and it's getting a lot of selling in here. There's no doubt about that. So if you take a look at on the weekly, down 10% this week, 20% off of its high, below the 50. There's nothing wrong with forming a base, for a few weeks. So anyway, it started, topped, like I said, in May 24th. So, give it 4 or 5 weeks here and let it base. And maybe people ignore it, forget about it. And it'll quietly form a base and give us another opportunity as a setup. Okay, so I'm going to take a look at, believe it or not, some software names. Oh, there was one other name in this group. Quanta Services. This is another one that I like. And yeah, the 265, it's still valid, but to me, you got to watch that 50. It's getting a lot of selling coming in here too. So you can see the RS line now diving below the moving averages. So that's definitely one to, be aware of. If you've owned it, if you own it back here from 180s or 220, you might want to think about trimming that. It looks like it's getting a little exhausted, a little tired. All right, so I was going to go to the software names. Pretty rare in this tape. We find software names doing well, but you know, things change quickly in the market, and these things were out of favor for a while, and now software is starting to pick up again. You know, this is the rotation that we see in the market. Wix rallied on earnings. This is one of our power earnings gap that we're monitoring on May 20th. It was up 24%. All it did technically was pull back to a moving average, form that little bull wedge pattern, found support and bounced nicely. So yeah, it's been a good week for Wix. This week it's up, yeah, nearly 10%. So wow, 180 after hours. Anyway, you never know after hours. Crazy stuff happens after hours. ZETA, another one of our power earnings gap stock. Let me see. Well, it's got the David Ryan ants actually. So the high that day was 1590 and it ran up to 1858. Now pulled back to the 21, finding support. That one looks pretty good as well. KD, another one of these software stocks. It blasted higher on May 8th. 28% move. It ran up to 28.60, now pulled back to the 21. You want to see these stocks finding support at the 21. That's pretty critical. Pretty much textbook action there. ESTC, they reported, I want to say last week. I don't know. I think I posted it on our site, but anyway, just pull back, you know, below the 200, give you the old okey doke, you know, embolden the shorts here, little peekaboo down below the 200. The shorts pile in, and then it's not so fast, start to running higher, and this thing's ripping hard from the low of this day. That's a nice shakeout. How do you do 92, 96, all the way up to 113? So that's a very quick turnaround from May 30th, which is last Thursday, to this. So in a week's time, 92 to 113. So that's a nice 20-point move. It's about 25%. So congrats to the longs there. Elastic looks fantastic. This is one software name that's definitely going to benefit from AI. I'm going to move on to Bros, some of my retail names, retail restaurant. Bros looks good to me, and I had it on my ready list, and some people were saying, you know, it's I missed it, you know, Bros is gone. I wouldn't say that. I would say that 38.41 could be another valid area. And especially if it gets above the high, what was it, 39.30 today? So watch this one tomorrow, above 39.30. This thing could really go. There's a lot of interest in here. I think everybody knows they're taking market share, and you know, it's just emerging from this stage one base. You could still say this is still an IPO base, due diligence phase, and now I believe it's going to start entering into its advanced phase, and this thing could advance rapidly. So Bros is definitely a stock of interest for me. CAVA had some insider selling today. The news, you know, and these filings came out, so everybody's got to shoot first and ask questions later. Down 7.6%, but all it did really, you know, pulled back, not even to its 21, still 3.1% above the 21. CAVA looks fine here. Speaking of IPO bases, you know, broke out of that base, and it's in its advanced phase as well. So, you know, there's going to be selling along the way, of course. Stocks run up like that, there's got to be profit taking. Chipotle Mexican Grill, their board approved their 50-for-1 stock split. So, you know, they celebrated with a 2% move, and I think the split is June 27th, if I'm not mistaken. I'd have to check that. I don't own Chipotle, but you know, all this thing did is run up after earnings. You know, it had a big move here and then ran up to 32.80, 32.60, and then pulled back to the 21, and then now found support and bounce. So it's had a good week this week. If you look at the yeah, it's up nearly 3% this week. So there it is on the weekly, pull back and bounce. So Chipotle is definitely like the big kahuna of these new healthier type of restaurants. Sweet Greens, CAVA, and there's just a lot of alternative, you know, choices now. You don't have to go to Burger King, McDonald's, Jack in the Box, or any of those other ones. All right, I'm going to move on from the restaurants and go to the retail names like the apparel shoe group. This is LULU. They reported, you know, pretty lackluster quarter. They showed international growth, which is positive. They had a massive stock buyback program, which is good, but you know, it was up 5%. It just it sold off so much. You know, this is opposite of sell the news. This is, but everything, the disaster was priced in, and it wasn't a disaster. So now it goes up. So we'll see how high Lululemon can trade. It's got a little gap here. What is a low? 469. That's quite a gap. So it's got a lot of work to do. Yeah, the earnings weren't that great. You can see here at the bottom of the page here, it shows the decelerating sales growth, 19%, 16%, 10%, and the earnings growth, going from 27% to 20% to 11%. That's not a good trend for a growth stock. Okay, and then Abercrombie and Fitch, they reported earnings last week or the week before, had a massive, power earnings gap move higher. This was May 29th, so that was last Wednesday, I believe. And then, so it was a 24% move. All this did is pull back to its 10, found support, and it's kind of bounced the last couple of days. It's up nearly 2% this week. You can see the earnings line heading north. Abercrombie and Fitch is a beast. I showed you ON, and Deckers, since it's joined the S&P 500, it's what had this gap higher. Another one of our power earnings gap stock, 14% move, and now it's forming this shelf type pattern. That's definitely something that I'm interested in. If it could go for another week or so. Let's check out the weekly closings here. Yeah, so maybe another week of tight trading would be a good thing for Deckers. All right, that's enough of that group. I've got to go to the drug stocks. I showed you NVO earlier. Eli Lilly up 2% this week. It's emerging from its base. It pulled back yesterday to its 10, so I put it back on the ready list, and it moved higher today in a pretty weak tape. But they're going to have their Alzheimer's drug with the FDA. They're going to present some data, so that could be a catalyst for Eli Lilly, which is one of the drug stocks that I like. Vertex is another one, and there's nothing to say here. This has been on our ready list, and if you didn't get it, I don't think you can buy it here. You can see this is one that came straight up from the bottom, pulled back 1 week, and now this week it's up another 7%. See that straight up from the bottom, 391. And then it surpassed 450 and then pull back 2 days. That's it. Went 457, then pull back to 435, and then it's adios muchachos. Yeah, it's out of the profit taking zone. It's out of the buy zone. It's in profit taking land. For me, I wouldn't be buying that there. That's like chasing. All right, and then the crypto stocks. I have a couple of them on our ready list. I should have 3, but I looked at my list. I only have 2. Coin was one of them. I like coin right here. It was a pretty weak tape today. It closed at the middle of its range, 248 to 263, closed at 257. So not a bad move for Coinbase. And let me see, the other one was, Hood. Hood bought a company today. Usually the acquiring company gets hammered, but this thing was up 7%. And it's just been pulling back. You can see consistently pulling back to the 10, the 10 there, the 10 here, the 10, the 10, and today pop. So maybe let that 10 catch up with it, the 10 EMA, because it's getting a little extended now. I know some people are asking about buying it. It's hard for me to buy something that's 8.6% above its 10 EMA. It should be closer to that. So let it tighten up a little bit. All right. The other one was MSTR. This is one that I forgot to put on my ready list, but it definitely has a standard buy point there of 1740. Trading a little bit below it right now, but to me that still looks valid and looks good. All right, that's it for me today. Tomorrow is the jobs report. That's going to be a pretty important number, as it's going to dictate the the direction of this session tomorrow. It's a short-term thing, but we want to continue the rally. We want a weak jobs number, and it might rally even with a mild number, moderately strong number, because we're in an uptrend, and so the trend is our friend. Anyway, that's it for me, except for I lied. I have one more thing in honor of the great Steve Jobs. We have some earnings tonight. Nothing that's going to drive the market tomorrow. This is DocuSign, which hasn't been able to get out of its own way for a long, long time. Gosh, I know a person who's in the business, in the real estate business, and she bought it up here at 300 area. Oh my goodness, in 2021, and now she's still holding, hoping. So don't do that, because this is probably never going to come back to its old highs. down 6% after hours. I didn't even look at their report. It's kind of a forgotten name, like a Peloton. This is a Samsara IoT software name. It's not going to impact any names in software, I don't believe, tomorrow. Down 6%. I didn't look at the report, but below the 50 and can't rally back above. It's sliced it vertically and now can't rally back above. So it looks tomorrow like it might take a trip to the 200. Anyway, rent. RENT, rent the runway. Oh wow, it's up almost 4%. I didn't even look at the data. I'll have more in the morning on these stocks. And then BRZE, this is one that it was up 60. It had this nice base. It reported earnings looked like it was going to ramp. Has done nothing but sell off, like a lot of software names. And now it's it's got these downtrending moving averages. Everything's below the 200. But tomorrow, looks like it might pop a little bit, get back above 40. We'll have to wait and see if it can drive through these moving averages. But I didn't look at the report. Like I said, I'll have more tomorrow. Anyway, thank you for watching. Thank you for the soldiers of D-Day. And maybe you have a memory. You can raise a glass to the courageous soldiers. Anyway, thank you for watching at mcstockcharts.com. We never give up.